you only need life insurance while your kids are at home, like have debts and whatever, and eventually you're not going to need life insurance.
There's going to be some kind of a tax implication, and it can be rather large, a very large implication, right? So really think through all the different scenarios so you can be better informed and you can put your money in alignment with your values and beliefs.
Well, if I don't spend as much on the premium for whole life because it's so expensive and I just put this little bit into term, that difference is going to become so much more. Well, there's no guarantee of that.
Hey, what's going on, Cashflow hackers? It's Chris with Life 180, and I got my buddies Charles and Jeff. Charles, Jeff. You've probably seen them on the Life 180 agent panel that we do every single week. And today, instead of that, we are going to record this video talking about why investments are horrible life insurance. And we are actually here down in the Dominican Republic. You can probably see we're in the studio. And these guys got to come down and visit me. We're doing a mastermind. And as part of that mastermind, we're creating a lot of content and trying to figure out the best topics that people need to hear about. And this guy here was like, had this awesome topic, and I was like, ooh, that's fascinating. Like, investments make horrible life insurance. So it was your topic, so I'm gonna let you start.
Okay.
So what are your thoughts when you hear that investments make horrible life insurance?
Yeah, I think my first thoughts go to is just counter to what we hear from the mainstream, because we're taught the exact opposite. Dave Ramsey teaches that you get as little payment for your life insurance, you buy term, and then the rest you put into mutual funds or into the market, so you're getting this huge upside, and this idea that everything's going to go to plan and that 12% every single year is going to grow into so much that you can become self-insured, and then by the time your 20-year term expires, you're going to be so freaking wealthy that you can live off of that. That's the main thing.
Yeah, and so the premise is the idea that you only need life insurance while your kids are at home, like have debts and whatever, and eventually you're not going to need life insurance, right? So you're going to, quote unquote, self-insure.
Right.
And so in the process of self-insuring, what are you using to self-insure? And most people would say, well, you're using your assets, your investments, and stuff of that nature to self-insure whatever you feel you want to do. The challenge with that, I think, from a high level, is in self-insuring, the reason I have a problem with it has nothing to do with the math, has nothing to do with investments, or like anything of that nature. Nothing to do with the money side while we're alive. It has everything to do with the fact that I look at my role on this earth and my responsibility to my family, and I think about I have a responsibility to leave the next generation better off than what I came into. And when I look at it through that lens, and I say it's important to me, and one of my core values, as we've been talking about, is that I leave a legacy, is that I take care of my family, is that I implement a strategy that makes sure that my kids have more opportunity and more skills, more knowledge, more information, and system and support to go out and take the family to the next level, right? Like, that's the idea. You just can't do that with investments. Like, there's just no way you can. Like, the problem is, and what most people don't realize with the buy term and invested difference is that there's no living benefits in your investment account, right? So like, I can be going perfectly and life can be amazing, and then I could be 74 years old and I get cancer, or I get some need for long-term care, and because of the fact that most of the time, 70% of the time, people are going to need long-term care or assisted living or something of that nature. The cost of that go crazy. Medical attention, whether it's cancer or something else, dementia, whatever, the medical attention you're going to need is just completely catastrophic to a retirement plan, especially as it pertains to a potential legacy. I mean, I've seen so many people burn through their retirement accounts just to pay for alternative cancer treatments, just to pay for deductibles and operations and chemo and radiation, stuff like that. And so, yeah, I mean, to me, it's all about starting with what you want to accomplish and what's the actual result you're after. And if the result you're after, and if you have values that say, I care about my family and I want to take care of them, and I want to give more opportunity to them than I had, well, then it's mathematically impossible to do this without a permanent whole life insurance policy.
Yeah, and for me, there's no such thing as self-insuring. It's either you're
That's it.
insured or you're not insured.
Yeah.
You either indemnify the risk of you passing away or you don't.
Yeah.
Now, the problem with a lot of investments is that they're not an efficient way to pass down wealth, right? Especially if they're locked up in a 401k. You have RMDs that you have to deal with. So no matter what, there's going to be some kind of a tax implication, and it can be rather large, a very large implication, right? So having a more thoughtful strategy and implementation, a lot of the argument goes, well, let's just put all our money in investment and just, indemnify the death benefit with term. Well, the term terminates, right? Why not have more of a holistic approach where you have a whole life policy that grows over time, and at the same time you invest in it, if that's what you want to do, invest in those equities that will also grow over time. But by balancing the two, you'll have much better results in your retirement, and your family will be protected. You're going to have an efficient transfer of wealth to them, and it's also a guaranteed product. I've talked to a lot of agents out there who've been in the industry for a long time, and they've seen the buy term and invest the difference fail on a lot of people, because what's happened is they were sold this idea that you can buy term and invest the difference, and by doing so you're going to have much better results. Well, here's the deal. A lot of people buy term and they don't invest the difference.
There you go.
So what kind of implications does that have? At least if you had that guaranteed product, you know exactly what's going to happen, or you're pretty certain what's going to happen. So really think about those different factors when you're thinking about your finances, and don't just take the word for the financial gurus out there. Use your own thought process and really think through all the different scenarios so you can be better informed and you can put your money in alignment with your values and beliefs.
Yeah, I think the whole buy term and invest the difference thing, the idea behind that, it's not a fair argument. It's not an accurate argument, because you should never look at life insurance as an investment, and you should never look at an investment as insurance. It just should never happen. And when you look at it like that, and I think the breakdown in the conversation with people like Dave Ramsey, when they start talking about this, is A, they're not looking at being like a guaranteed result in life, B, the actual living benefits that permanent cash value whole life insurance will provide to you, which solves other problems. It's not just a death benefit. And B or C, it's like, I remember last year I kind of started throwing out this phrase, buy term and save the difference, right? Because if you're not going to compare life insurance to an investment, and we're not going to use it as an investment, well, it's not fair to compare the returns in a whole life policy to investment expectations, because they don't have the same risk profile. So it would be absolutely insane to think that you're going to get the same returns as an investment with a product that has better guarantees and a more safe risk profile, right? And it's an infinitely more safe risk profile in this instance, right? And so if we're going to look at this, I always challenge people to think about, all right, let's take a step back and like, you're not buying term and investing the difference, because typically speaking, people invest too much too soon, and they need to save money first before they invest. And so it's like, buy term and save the difference. Well, if you're going to save money, what are you saving money for? The answer is probably an emergency fund or something of that nature. And so now you have to actually ask yourself, what do I want for emergency fund? Dave Ramsey would tell you need 6 months, right? I'll tell you you need more than that, but let's just go with the 6 months. The question is, where are you going to keep your 6 months of capital? If you have a $100,000 a year income, that means you need $50,000 in a liquid account that you have access to in case of emergency. Now I encourage you to think about, what's an emergency, right? Is it just losing your job? Or is it maybe getting cancer? Or maybe getting, type 2 diabetes, or having a heart attack, or any kind of chronic illness of that nature, right? Getting dementia. To me, those are emergencies, right? So saving money in an emergency fund in a bank, when we're comparing, actual emergencies, and like, I don't know about you, if I lose my job, I'm not concerned about it. Like, I mean, yeah, if you're a W-2 employee and you lose your job, it's obviously not a comfortable situation. I wouldn't quantify that as an emergency. Go get another job. You know, it might take a little longer depending on the economy and the market and so on and so forth. But I tell you what is an emergency: when you're working and you get disabled, when you're working and you get cancer, or you get diabetes, or you have a heart attack and you actually can't work, and you got medical reasons that you can't go back to work. I promise you, if your emergency fund is not inside of a whole life policy with living benefits, you're going to be in trouble, you know? And so when you start thinking about this whole buy term invested difference, I think it's just not fair to talk about whole life. And I'll say this, the only reason that whole concept started is to counter whole life insurance. That was it, right? Because whole life is a bad investment. Whole life is not an investment, right? So you got to get that like really, really clear. And you have to understand what problems are you trying to solve with what dollar, right? And all I know is that when you put money into a whole life policy, it's performing multiple functions. It's going to be a liquid emergency fund in the short term. It's going to be living benefits in the long term, you know, while you're alive. And it's going to be an amazing guaranteed legacy creation tool for the next generation.
Yep. I think for me, the conversation, what Charles was saying, I like to put numbers to, and I think it was in Garrett's book where he talked about this, like the whole self-insurance myth is really just no insurance. And if you say, okay, well, I've got $1 million death benefit, and I'm going to be comparing that to being self-insured and having $1 million in my investment account. Well, if you went to get your $1 million, you don't have $1 million, so you need to factor in the additional 10% and then the taxation on top of that. So you have to have, what, $1.5 million to come back down to $1 million to compare apples to apples. And then if, you know, your spouse passes away to replace that income, you actually have to have that $1 million liquid to really truly be insurance. So we don't have that. We just have this false sense of security that, well, I've got this big balance in my account. It's not really mine. It's not really as big as I think it's going to do. And, you know, the idea is, well, if I don't spend as much on the premium for whole life because it's so expensive, and I just put this little bit into term, that difference is going to become so much more. Well, there's no guarantee of that. We don't know that for sure. And like you said, Charles, what if we don't have the discipline? What if life happens? That's what frustrates me about that.
Life doesn't happen, though.
I know, right? That whole philosophy of buy term, invest the difference, and you're going to be perfect. Like, that's best case scenario. That's not worst case scenario planning, and that's counter to what we're doing, where we want to make sure that whatever happens bad in our life, it's probably going to happen more than one time, that we're not destroyed financially and set back 5 or 10 years to be able to rebound from a major catastrophic event. I think everybody here's probably had something or multiple things in their life or in your family that's gone wrong, that's affected us financially, whereas if we had better protection, it could have alleviated a lot of that.
Yeah, I mean, I think for me, at least, I look at it as I always want to have my financial strategy set up in a way that I have an opportunity to win in every situation, and I'm protected. I say it all the time. What's the upside? You know, what's the upside potential in any situation? What's the downside risk in any situation? And can I live with the downside? And you know, the problem with IUL, you know, is the fact that people are selling it with upside potential and downside protection. It's the biggest misleading statement in the history of personal finance. You know, and so it's why the power behind a properly designed whole life insurance policy as part of a greater financial strategy is, to me, one of the most powerful tools that exists in personal finance around the world. And you know what's interesting, I gotta say this, is that since I've been in the Dominican Republic and lived here and traveled a lot to Colombia and all these other places, what it offers, what utilizing these policies as properly designed, you know, banking alternatives, saving strategies, leverageable accounts that create real safe leverage, it only exists in the United States pretty much. Like, I go to all these places and they, like, what you have the ability to do in the United States with these products, these other countries, when I tell them, like, their jaws are on the ground. They can't believe they just wish they could get it. And so, I mean, and they can, by the way, if you're a foreign national that's watching this, you can reach out, and there are now foreign national programs. You have to just have insurable interest in the United States, but you can be domiciled. You can live in other countries. And like, there's like 180 countries around the world that you can do this in now. It's a relatively new development, but the bottom line is you can get one of these policies that we're talking about. you can implement this strategy in your life. You just need to have business ownership or real estate ownership in the United States in order to qualify.
And for me, if you're watching this far, right, you
You're a
obviously
nerd like us.
you
No, no.
you are a nerd like us. No, you have an interest in this concept, right? So I'm a big like prove it kind of guy. So I go down rabbit holes and I try and find like the brightest minds that back it up with science and math and all those good things. So I'd highly encourage you to look into Dr. Wade Pfau and his findings on how having a whole life policy and investing will give you much better results in retirement. It just becomes a no-brainer. He's got white papers where he gives different scenarios. He runs things called Monte Carlo simulations where they run thousands of different scenarios that could happen in the economy.
Yeah.
And by him doing that, he's pinpointed that the numbers prove that having the whole life policy and investing in equities gives you far greater results than if you were just to buy term and invest the difference.
Yeah, I mean, it's your whole life insurance policy is not going to be an investment, but it's going to make your investments better. Like, that's the reality. And I always equate it to, because I'm a child of the 90s, you know, I grew up my teens in the 90s, and I remember watching the NFL, watching the BASF commercials where it's like, at BASF, we don't make the paint you buy, we make it brighter. We don't make your fishing line, we make it stronger. We don't, like, their whole concept was, we don't make the product you buy, we make the product you buy better. And so whole life isn't the investment you make, but it does make your investments better. You know, that's what I love. So anything to end from you?
I think we covered it well. I mean, it probably comes off like we're totally anti like investments in the alternative or the traditional way, where I think at the bottom line, we just want to really shed light on pros and cons of both. And if you're listening to somebody that's totally pitching buy term and invest the difference, and they happen to have a partnership with a buy term company and then also the mutual fund company, then there's probably a conflict of interest. I didn't mean to go there.
I did.
Conflict of interest with
You're
that.
kicking me under the table.
Right.
No,
And you just have to look past that. You have to be a smart enough consumer with everything out there. I mean, I think back to Tony Robbins' book, Money Master the Game. Like, if you look at that really carefully, and I can't remember who it was that pointed this out to me, whether it was you or Garrett or who, but that, you know, of the 12 people interviewed in there, I think 11 of them were basically just pitching the products or the companies that they themselves built and not giving you true, well-rounded information. I think that's our passion at bringing this information, is giving you well-rounded perspective, not just focusing in it with blinders because this is how I want to get paid, or this is my belief system rooted in my own past patterns and turmoils. It's more of what's the pros and cons of getting you to think about all scenarios, look at things from all sides to make a good informed decision that aligns with what your goals and dreams are and your vision for your finances.
It's well said. I think what's interesting is I can't count how many times somebody said, "Oh, you only have this opinion because you're selling it and you're making money." It's like maybe just maybe I'm still doing this and selling it because I believe in it, and that's why I do it. You know, I mean, I know that's a hard thing for a lot of people to believe.
I also think there's easier things to sell than life insurance.
Yeah, if I were just trying to sell things to make money, I promise you I wouldn't be selling life insurance, right? Like, I could go make a lot more money selling other things for that. So anyway, hopefully you found value in this. If you are enjoying this, make sure you go follow Charles and follow Jeff. I'm going to put their links in the description below. Go click on them, go follow them. They're putting out great content all the time. And of course, if it's your first time here, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video. Until next time, have a blessed, inspirational day. We'll talk soon.